Do you know that you can generate regular income on your capital just by following a simple strategy? Do watch the entire video and understand what that strategy is and how I apply in my swing trading to generate that income. Thank you guys for stopping by to watch this video. I welcome you all to my channel Pure Patterns. In next few minutes, you are going to learn what swing trading is, and also I'm going to share one swing trading strategy. Also, we are going to test the strategy using some examples. But before I give that strategy to you, I'm going to explain you about one indicator which is leading in nature, which combined with price action can have very good results. So make sure that you watch the entire video and do not skip any part of it. Before I dive into what swing trading is, it is equally important to understand which section of the audience is going to benefit out of this video. Office goers, somebody who cannot devote much time reading what chart is or what chart patterns is, or a beginner who just want to learn what swing trading is, or a trader who is already doing swing trading but wants to improve the performance, then this video is definitely for you guys. Well, there is other side of it as well. Who should not watch this video? Somebody who is a gambler or a daydreamer who wants to get rich overnight just by trading these strategies. Because they say trading is all about probabilities, just like rolling a dice or spinning a coin. There's a 50-50% chance of winning as well as losing. So one should be aware that what we are doing is trying to find a high probable setup. Well, that being said, let's move on to our next section, which is what is swing trading. Swing trading is a trading style in which traders try to capture the short-term gain which is arising in that stock. Then the question is how that price fluctuation or swing is arised in that stock. That could be because of institutional buying, which creates the demand in that stock, or that could be because of the momentum which is being generated because of the news around it, or that could be because of the fundamental change which has occurred in that company or the stock which you are trading. So all these factors, or maybe beyond that, would create a price fluctuation in that stock, and as a swing trader, we would try to benefit out of that. In this style of trading, the trader would try to capture or hold on to their trade for maybe 2 days or maybe a week or maybe beyond that, depending upon the price action or the momentum which is still left in that stock. You see, the holding capacity in swing trading, apart from momentum and price action, depends upon other parameters as well. It is influenced by other parameters, such as, let's say, whether the price has already reached to the target or the price has already triggered a stop loss. Depending upon these parameters, the trader can also take the decision whether to hold on to the trade or exit out of the trade. But the question here is how to find what is my target, or for that matter, what is our stop loss. To determine that, we have to understand our next section, which is called the strategy. Now that time is to reveal the strategy. Before I give that strategy, let me tell you what that strategy is. That strategy which I'm gonna share with you is completely a price action based strategy. I'll also give you one indicator which is leading in nature, which I promised in the beginning of this session, which combined with the price action can give us a very high probability trades. So do watch this entire section, understand the rules of the strategy, do not skip any part, and we also will dive into the back testing part as well, where I'll explain you how to apply the strategy to gain maximum out of the strategy. Well, the time has arrived to just reveal what the indicator is. The indicator which I'm trying to talk about is CPR, or central pivot range. What the CPR is, how to add it on your chart, which I've discussed in one of the short videos. I'll put the link in the I button. Make sure you watch that and come back to this section. For now, for the benefit of the new audience, let me tell what it is. It is a leading indicator which can be used for intraday as well as swing trading. In this video, we are only focused on the swing trading, so we'll only discuss about the swing trading part. Since we are considering only swing trading, so we will be only interested in monthly CPR, of which only 3 sections. One is monthly CPR, the other is monthly resistance R1, and monthly support S1. Rest all are out of our scope for this video. Before I reveal all the rules required for this strategy, let me tell you how to add this indicator on your chart. Click on to the indicator section, try to type pivot patterns, and then in that you'll get swing periods by period patterns. In my case, I'll be using this indicator for my trading, whereas in your case you can add any CPR indicator by any authors of your choice. In that CPR indicator, try to select monthly CPR, monthly resistance, monthly support. These are the three values which we are interested in. Rest all you can uncheck and use it on the daily time frame. Let me tell you, this strategy is gonna work only on the daily time frame. You should not use it any other time frame apart from daily, and the CPRs also should be monthly CPR. Only then this strategy works. Anything beyond or less than this would not give a desired results. So make sure that you are on the daily time frame and you have checked monthly CPR. Now the time to reveal the rules for this strategy. There are 5 rules for this strategy. Make sure that you watch all the 5 rules and apply 5 rules. So what this strategy is, what are the rules? Let's get into that section now. Rule number 1, ascending CPR, and it should not be overlapped. What is a ascending CPR? Ascending CPR is a CPR in which the current CPR or current day, it can be current day, week or month. In our case, it is current month, which is greater than the previous month CPR. You see, you can clearly see it on the chart, which is marked by a red arrow. Every month, the CPR is increasing and it is not overlapping. So it should, first thing, it should be ascending, and second thing, it should not be overlapping. These are the two conditions you should remember when filtering out the stocks or any instrument you want to trade. Anything which is overlapping or anything which is descending, we are not interested for our trade. So rule number 1 is very clear: ascending and no overlapping CPRs. Let's move on to the other rule, which is rule number 2, which talks about the location. Be it real life or trading, there are 3 W's we should always understand. That is what, when and where. In this rule, we are going to understand when and where. The what part of it is explained in the next rule. For now, for this rule, we'll understand where we are going to trade and when we are going to trade. So first we'll answer when we are taking the trade. You can clearly see in the chart there are 3 sections, that is monthly S1, monthly CPR and monthly R1. So whenever the price is close to S1 or close to CPR or close to R1, we are trying to initiate our trade. Anything which is away from these values or these zones, we are not interested in this trade. Now we have answered the when. So now the question is where. Where on S1, where on CPR and where on R1. These are the things we have to understand now. So we are taking trades above S1, above CPR, that is top central period, and above R1. Anything beyond that we are not interested. So we have answered 2 questions, when and where. Let's move on to our next rule and understand what we are trading. What is that we have to look for to initiate our trade? Well, let's move on to our next rule, rule 3, that is identification of bullish price action. In the previous rule, what we have done is we have identified where and when we are going to trade. In this rule, we are trying to find what we are trying to trade. This can be any bullish price action which you are familiar with. For the interest of the new users or the new beginner traders, I am trying to draw only 3 patterns, but one should not restrict themselves for these patterns. What are those patterns? The patterns could be, you can have a bullish engulfing where you have a red candle followed up by a green candle. You can have a red pin bar and a green candle taking the high of that red candle, or you can have a green pin bar followed up by a green candle taking the high of the green candle. So there can be n combinations or any n bullish candlestick patterns you can trade, but we are only interested when these patterns are forming at the locations which we have identified in the rule number 2. So if you have to go by the simple rule of price action, you would have the entry whenever there is a high of the previous candle is broken, and stop loss would be the lowest low of the 2 candles which we are trading. So rule 3 is about identifying bullish price actions and trading in the locations which we have found out in the rule number 2. This completes our rule number 3. Let's move on to our rule number 4, which is identification of stop loss, entry and target. In rule number 3, I have clearly given you what would be our entry and stop loss with respect to the price action. But when you are trading with a CPR or when you are trading with R1 or S1, so it becomes very important to apply our stop loss very logically. So let's take this example of LT. You can clearly see that there are so many small candles or red candles being formed. What would be our ideal case here? whenever there is a bullish price action which is formed or taking the high of this previous day candles, then you enter that. What would be our stop loss? Stop loss, logical stop loss would be below CPR, but somebody who is very aggressive can also put the stop loss below the central pivot. That is the red line what we are seeing. What would be our target? Target would be minimum 1:2 or 1.5 on the some exceptional cases, but ideally it should be 1.2. The same things applies whenever you are trading above R1 and above S1. But before I give what this rule 5 is, it is equally important for us to understand how this strategy is working with all those 4 rules. So we'll go to backtesting and test some of the scripts, and then we'll come back to this strategy. Make sure you watch this testing part, backtesting part, you'll understand how the strategy is working. Also, I'll be giving some hints about rule 5. Make sure you watch this section and understand how the strategy is working. You can clearly see that Nifty with a daily time frame, you can clearly see that these 2 months are not eligible because there's a descending CPR. The next month is eligible because it is ascending CPR. You can clearly see that there is small candles being formed. Can have very small risk as well as small reward. But one can also argue that after a few days the price might have come to our cost price. But that's not the case, because I'll be telling the rule 5 where you can exit the trade with a decent profit. Now you can clearly see that there is a narrow CPR and there's a price action, but the price action clearly says, if you go to the chart and see left side, clearly there is a left side consolidation. So there is no point in taking the trades here, because there's no clear sign. However, in the next CPR, look at this CPR. This CPR has narrow CPR as well as there is a ascending CPR. Let me zoom it for you. You can clearly see that the small candles, there is a breakout of this consolidation. It is breaking out of the consolidation, plus it is breaking out of the R1. So you could have taken the trade here with a SL below the green candle or below the R1. If you have taken this trade with small risk, there could have been huge reward. The other opportunity which we got is breakout of this R1. Somebody who has taken this breakout of this R1 keeping the SL just below this R1, then stop loss would have triggered. But if you see the price action, there is a small consolidation being formed. The logical stop loss would be just below that consolidation rather than putting just below the R1. However, as per this strategy, let's accept that this has triggered our SL. So we'll look for the other opportunities. In the next CPR, you can clearly see that there is a pin bar being formed. You can look for the opportunities, buying opportunities, whenever the high of this pin bar is broken, keeping the stop loss just below the CPR and entering just after the high of this pin bar is taken. If it have taken after the break of this high, we could have driven this trend to get our minimum 1:2 reward, or till the time the trend is reversed. In this case, it is a bearish reversal sign. You can clearly see there is a bearish engulfing. Well, the other opportunity you can clearly see that another opportunity, breakout of that CPR with a pin bar keeping SL below. You could have driven that trend. You could have got a huge reward. Let's move on to the other chart. Let's see how it works on the stocks as well. So the stock which I have chosen is LT. I can clearly see the same opportunity just close to CPR. Let me mark it for you. Let me hide this zone. Yeah, I can see that there is another opportunity here close to CPR. There's a small candle being formed near the CPR. There's another opportunity there. There's another opportunity, again the same kind of pattern, right? Breaking through the CPR. You can also see there is a volume confirmation breaking the previous resistance. So that zone or that price becomes very important. So next time whenever the price is approaching to that, you can confidently take the trade. It has approached that price zone. You can see that it has come back to that CPR, again the same pattern, right? Breaking, just taking the bounce from that CPR. Again here you can see the other opportunity. So there are so many opportunities. Again there's another opportunity, you can clearly see there. So there are so many opportunities you can take using this strategy, but only thing is you have to go and backtest it. Only then you'll get that confidence. Here again there's another opportunity here. There was another opportunity there, but somebody who has taken that breakout of that R1 keeping that SL below the R1, then the SL would have been triggered for that trade. but nevertheless, that's a part of the game. You also have to take the SL apart from the reward. Let's go to the other script, that is Maruti. You can clearly see there is an opportunity here, there's an opportunity here, there's an opportunity on this. However, the first opportunity can be ignored because there is a overlapping CPR. Then the third opportunity can clearly see, somebody if would have taken the break of R1, then the SL would have triggered. So that's part of the game. So just be very optimistic, but here it would have given a good reward. So here also we got that opportunity, but somebody could have claimed that it would have hit the stop loss and we could have been in good loss. But I'll explain you the rule 5 where you can exit this trade with a minimal profit rather than taking the loss. So other opportunity which I got, which I can see is there's a CPR. Let me mark it again for you. So there is an opportunity here, and there is another opportunity here. There's another opportunity here. You can see that in a day our target of 1:2, even we got 1:4 in this trade. You see, with this trade there is a huge risk to reward, but we'll not consider that, because as a ground rule we'll only consider two things. One is our risk to reward of 1:2 is met, or there is any trend reversal. Only then we'll exit out of the trade. We'll not see that there is 1:10 or 1:4 is met. Well, this marks the end of this section. Let's move on to the other section where I'll be revealing what this rule 5 of this strategy is. Before I reveal what this rule 5 is, make sure that you hit the like button and do subscribe to the channel if you are new to this, and also click on the bell icon for latest notification on the video which I post on this channel. Now the time has come to reveal what this rule 5 is. The rule 5 which I'm talking is about the trade management. What is this trade management? Let's think. The rule 5 which I'm talking about is with respect to trade management. Let's think in this way. What are the possible outcomes of a trade which I take? There are three outcomes. One, the price might go in our favor and hit our target. Well and good. Our analysis was right. Then we should be very happy about it. Possibility 2, trade might not go in our favor. It might hit our stop loss. We should not feel sad about it. This is part of the game. So let's accept it and let's find the other opportunity. The third possibility is neither it hits the target nor the stop loss. So how do you manage these possibilities is the rule 5. In this rule 5, we are going to hold the trade depending upon this rule. What is this rule? The minimum criteria or the minimum number of days or duration you'll hold this trade, unless you have triggered your stop loss or target, will hold for minimum 3 days. Within that, there's nothing happening, neither stop loss or target is triggered, then it will alert us and we'll wait for another 2 days. It should either hit the target or stop loss. If it is not hitting neither stop loss or target, then on the 5th day, that is end of the day, we'll go and trail our stop loss to the cost, or we will exit the trade. This is how we manage this trade. So make sure you go back to the video and understand why I said there was a minimal loss or the minimal profit. Well, that's it guys. It's time to wind off this video. I hope you have enjoyed watching this. I thoroughly enjoyed making this video for you guys. We'll meet up in another video with another interesting content. Till then, see you. Happy trading. Bye bye.